What's going on, family? Hey, listen, have you ever heard of a concept called infinite banking? Well, I actually received a video suggestion from a good friend of mine, wanted me to check this video out, and I thought this would be something good to share with my audience here so we can learn together. So if y'all ready, I'm ready. Let's go. What's going on, family? It's your boy Mike Macklin, aka Money Mike, the financial Thanos, because I'm snapping my fingers and I'm turning your financial problems to dust. Hey, today we're talking about infinite banking. Again, I got a video from a good friend of mine talking about this concept, and so I wanted you guys to check this out with me. We're going to check it out, pick some points from it. I'll give you my own thoughts. And also remember to comment below with your thoughts. And don't forget to like and subscribe to my channel as well. Hit that notification bell so you'll be notified every time I drop new content. So let's go ahead and get into this thing right now.
All right, Wealth Nation, here's the deal. We're going to define a line of credit so that we're all on the same page. So a line of credit is very similar to a loan that you would get at the bank. With a loan and a line of credit, either way, you are approved for a specific predetermined amount. But unlike a loan where you have to borrow all of the money up front, a line of credit gives you a little flexibility because you can either obtain all of the money or a portion of it. And with a line of credit, if you only use a portion of the funds, you still have the availability of the entire amount that you were approved for without having to reapply. Think of a line of credit kind of like a credit card, but in this instance, the rates are typically lower than credit cards. And when you repay the money, all of those funds are available to you to use again. That's why a lot of people like using lines of credit, because when you pay the money, you have it available again, and you can continue to borrow the funds and pay them back for as long as you have your line of credit.
And depending on the company that you're using for a line of credit, depends on the term in which that money will be available. So it's generally between 6 to 5 years.
The same way you would get a loan, credit cards, your checkings accounts, or savings accounts, this is just another product that the banks provide to you where you have to apply in order to qualify for this product.
Okay.
Now, with lines of credit, the thing to keep in mind is you are usually obtaining an unsecured line of credit. And what we mean by that, an unsecured loan, is when there is no collateral backed by this loan. And the collateral is simply the bank's guarantee that they will receive the payments.
Right.
Now, because this loan is unsecured, generally the interest rates are higher. And that's across the board no matter what type of loan you have. If it is unsecured, the interest rate is higher than it would be if it was a secured line of credit. Like, for example, your mortgage. That's how you're able to get such low interest rates, because it has collateral being your house.
Exactly. Car loans, things of that nature. And with lines of credit, you are typically going to pay simple interest. Now, if you don't know what simple interest is, then check out this video where we talked about the difference between simple interest and compound interest. Now, why do people usually get lines of credit? I'd say the first one is overdraft protection. That's something that we don't recommend that you do because you need to fix the bleeding.
Right. It could be dangerous too.
As opposed to dipping into your lines of credit to save that overdraft protection. But we do know people who use personal lines of credit for financing. We know people who use business lines of credit to finance their business. And there's another big one called a home equity line of credit, or a HELOC, where you literally get the equity in your house in a line of credit. All right, so I hope that wraps up a general idea of what a line of credit is and what people use it for.
Now that we talked a little bit about what a line of credit is, let's talk about infinite banking. Infinite banking is the concept of using whole life insurance cash value in order to finance different things that you would normally finance through a bank. So when you pay your premiums on a monthly, semi-annual, quarterly, or annual basis, you accumulate cash value. Now, instead of taking the cash value out of the policy, which would be considered a withdrawal, you use the insurance policy as collateral to borrow from the insurance company.
Okay.
So here is where we have two distinct differences between a line of credit and a policy loan, because you are using the insurance policy as collateral.
Right.
And because you haven't disturbed your money inside your policy, your money still continues to grow. Now, infinite banking is how you use the policy loan in order to finance your lifestyle. So infinite banking is the process of using those policy loans in order to finance your lifestyle. Now, with that said, let's break down the actual policy loans and how it's very similar to a line of credit.
Okay.
A policy loan, you can borrow all of the money that's available or just a portion of it, and you only pay interest on the amount in which you've used, which is a characteristic that's very similar to a line of credit. Another very similar characteristic is when you pay the money back to the insurance company, that money is available for you to use again.
Nice.
Now, what do people use policy loans for? They use it for personal needs. They use it for business needs. They use it for debt consolidation. And investing. There's a variety of ways you can use policy loans the exact same way that you can use a line of credit. It's a pool of funds that you have available at your disposal. You just have to make sure you're able to pay the simple interest in which you'll be charged for the funds that you borrowed.
And additionally, you need to make sure that you pay the loans back the same way that you would with your line of credit. Now, when you pay the loans back with an insurance policy, that doesn't increase your cash value because remember, where did you get the money to begin with? You got the money from the insurance company. So you're paying all of that money back to the insurance company, which, like Darius said before, opens up another pool of funds that allows you to continue funding whatever it is that you need to finance.
So one distinct difference between a line of credit and a policy loan is it does not affect your credit at all.
Good point.
Because a line of credit, some people use lines of credit for different strategies in order to increase their credit limit. But when it comes to a policy loan, it has no bearing or no effect on your credit at all.
Right. All right. That was actually some pretty dope information. I want to recap really quickly just to make sure we all picked out everything that we need to pick from this. First off, they started out talking about the difference in a loan and a line of credit, which was good because in infinite banking, it works a lot like a line of credit from what I understand. I'm just learning this just like you are that's watching me right now. So I'm just using what I understand from this just to kind of break this down a little bit more. So with this whole life policy, you're basically getting a collateralized loan, but it has the similar characteristics of a line of credit to where you can use it, pay it back, use it again. And I like that a lot because a lot of loans that you get, I tell people this all the time, why I like lines of credit better than I like loans is because with lines of credit, you can reuse those funds. If you get a loan, once that money's gone, it's gone. And also with a loan, basically it's all out there. You can't get it in pieces or portions. So I like that characteristic of a whole life policy. Another thing that I liked as well was that it doesn't affect your credit. A lot of people have a hard time getting a line of credit because their credit isn't great. And this further to me, and forgive me if I'm jumping around here, but this further to me justifies why more people should get whole life insurance or life insurance in general, but more importantly, whole life. Now, I will say whole life policies cost more, but as you can see, once you start understanding the strategies of money and how to use it, you start to understand that, a higher price doesn't always matter, because if I'm able to do more with that, then I can actually live with paying that higher price. And in this case, you're paying into a strategy that's going to allow you to pay for your lifestyle with this loan. And this is why it's called infinite banking, is because it looks like this is something you can continue to use. And now you're not as involved with the banks. You don't have to ask the banks for loans. You don't have to do these things because you've already established your collateral with the policy. So I think this is a really cool thing, and I'm glad that my friend sent me this. Appreciate that. I will shout you out. Larry Patterson, he is on YouTube as well. I'll put his channel in the link so you can check out some of his videos. But I hope you all enjoyed this information. Comment below your thoughts. Comment below any questions you may have about this particular subject of infinite banking. And make sure y'all hit that like button if you enjoyed this video. That's my time, ladies and gentlemen. Gotta leave y'all with that love that I always leave you with when I close. I love you. God loves you. He smiles when he sees you, and he sees you all the time, so he's always smiling. So why aren't we? Hey, y'all take care of yourselves. Make sure y'all check out my other videos, and I will see you guys on the next one. Take care of yourselves. Gone.